Hello, everyone, and welcome back to our weekly portfolio recap. Today, we are analyzing the complete standing of the main portfolio as of June 14th, 2026. If you have been watching the broader financial markets over the last 7 days, you know that things have been a bit choppy. Volatility has knocked a lot of growth-only investors off balance as money rapidly shifted around. All eyes on Wall Street were glued to the historic SpaceX initial public offering on Friday, June 12th, which shattered records as the largest initial public offering in history, raising $75 billion and instantly pushing its market cap over $2 trillion as shares soared nearly 20% on day one. While that massive tech listing wave ignited a ton of speculative trading and media hype, the broader indexes spent most of the week digesting economic data, wild swings in energy prices, and headline noise, ultimately ending the week relatively flat. Against that backdrop, our portfolio value took a minor temporary breather this week, pulling down by $2,021.85 since our June 5th check-in. This represents a minor money-weighted down move of 0.82%. Bringing our current main portfolio net worth to exactly $243,147.04. Our starting balance at the beginning of the week was $245,314.03. The overall market price fluctuation accounted for a negative position movement of $2,166.99. But here is where our strategy differs from 99% of retail investors. While capital gains fluctuate wildly on paper, based on market sentiment and institutional money chasing the latest tech initial public offering, our underlying passive income engine did not miss a single beat. While traditional stock prices dipped early in the week, the cash register kept right on ringing, accumulating $145.14 in settled cash dividends in just one single week. That is the beauty of focusing on cash flow. It acts as an absolute defensive cushion during down weeks, giving us liquidity when other portfolios are completely frozen. This leaves our current uninvested cash buying power at $150.74. We are consistently letting the machine work, ready to scoop up assets at discounts and accelerating the compounding loop. Now let's look directly at the cash receipts that hit our ledger between June 5th and June 12th, 2026. This week was an absolute showcase for how daily and weekly income strategies function in the real world. Let's start with Friday, June 12th, which was a massive payday for the account. First up was the Roundhill Innovation 100-0 DTE Covered Call Strategy, Exchange Traded Fund, ticker symbol QDTE, which paid out $12.97. Next, a couple of long-term blue-chip individual stocks paid their quarterly distributions. Healthcare giant Pfizer, ticker symbol PFE, dropped $13.58 into our balance, followed closely by industrial conglomerate 3M Company, ticker symbol MMM, which added $4.34. Finishing out Friday, the Defiance NASDAQ 100 Weekly Distribution Fund, ticker symbol QQQY, landed two distinct income entries on our statement, one for $4.27 and a second payment of $6.25. Moving back to Thursday, June 11th, our high-yield income sleeve went completely parabolic. The single largest payment of the entire week came from the YieldMax Magnificent 7 Fund of Option Income Exchange Traded Funds, ticker symbol YMAG. This position generated two substantial payouts on the exact same day, a massive lead payment of $35.84 and a companion payment of $17.11. Combined, YMAG loaded over $52 into our cash balance in a single 24-hour window. But Thursday didn't stop there. The Roundhill SP 500 0DTE Income Fund, ticker symbol XPAY, hit us with an excellent payment of $24.93. In the financial sector, Prudential Financial, ticker symbol PRU, paid out $12.63. Defense contractor RTX Corporation, ticker symbol RTX, deposited $3.41, and technology kingpin Microsoft, ticker symbol MSFT, paid out $10.66 in quarterly dividend cash. Earlier in the week, on Tuesday, June 9th, pharmaceutical staple Johnson & Johnson, ticker symbol JNJ, contributed $4.75. And finally, kicking off this tracking period back on Friday, June 5th, Defiance's QQQY brought in another double payout, depositing $6.99 and $4.12 respectively. When you stack up every single one of these distinct payments, they build an unshakable wall of cash totaling $145.14. To truly appreciate the power of this strategy, we have to look past the weekly data and review our high-level projections from our primary tracking dashboard over at trackyourdividends.com. This is where the sheer scale of compounding becomes real. According to our latest verified metrics, our portfolio is currently maintaining an average portfolio dividend yield of 6.53%. However, because we have held our core positions for an extended period and systematically averaged down during market dips, our actual yield on cost has expanded to a legendary 10.85%. This means that for every dollar of original capital we have put to work, we are capturing a double-digit cash return. This optimized yield on cost scales our total projected annual dividend income, our PADI, to a major milestone of $15,558. Let's break down what $15,558 in annual passive income actually looks like when you translate it into real-world lifestyle terms. On a monthly basis, this portfolio is now bringing in an average of $1,296.50 every single month, 12 months a year. That is over $1,200 of pure cash flow available to systematically pay off regular household bills, fund lifestyle expenses, or instantly reinvest back into additional shares of stock. If you want to look at it on an even more granular level, this portfolio is now hammering out an average of $42.62 in completely passive dividend income every single day of the week. Whether we are fast asleep, out traveling, exercising, or relaxing on a Sunday afternoon, $42.62 flows into our balance every 24 hours. This is the definition of true financial freedom. We are no longer trading our time for money. Instead, our money is working 24 hours a day, 7 days a week to manufacture more capital. As we head into the upcoming trading week, our strategy remains completely unchanged. We will completely ignore the short-term noise of day-to-day market price fluctuations or the temptation to chase volatile new listings. Red days on the stock chart do not bother us. They are simply looked at as a welcome opportunity to put our accumulated dividend cash to work buying premium assets at steep discounts. But staying the course isn't just about the mechanics of the portfolio. It is heavily about keeping your mindset right when the media is hyping up extreme market movements. Because noise like this can test anyone's discipline, I am actually thinking about putting together a brand new finance affirmation video for the channel soon. I want to build a powerful audio session that completely centers your mind, blocks out the market panic, and keeps your focus locked on long-term wealth, something that can serve as an ultimate daily tool to help me and all of you stay completely grounded during high volatility weeks. Until then, our portfolio beta is currently sitting at a well-managed 1.22, meaning we are capturing superb market participation while maintaining a cash flow engine that guarantees steady returns regardless of market direction. Our focus stays locked onto expanding our daily passive income average, increasing our total projected annual dividend income, and letting the snowball effect do all the heavy lifting over time. Stay disciplined, keep funding your machines, focus strictly on the cash flow, and watch your empire grow. Thank you all for tuning in to this week's comprehensive portfolio breakdown, and I will see you all in the next update.